this really sets up the Saudi Aramco IPO and the fundamental backdrop. What is it listing into?
Yeah, I think right now when you look at the energy equity markets, I think sentiment is at a 2 or 3 decade low. We have seen continued underperformance from energy equities across the board. You've obviously had very strong broad market performance this year. WTI oil prices are up roughly 25%. And generally speaking, the major oil companies are flat. And the smaller ones are down, 20% plus in many cases. So very poor investor sentiment right now for energy equities.
Now, I guess then the question becomes, as you wind up having Saudi Aramco trading at the same time where OPEC's going to be meeting, does this sort of move OPEC in the direction of more cuts, more supportive of prices, et cetera?
Well, I think what you're going to have to see is Saudi Arabia do their best job from a diplomatic perspective to really lobby a lot of the other OPEC members, as well as some of the large non-OPECs like Russia, to really come out with some positive messaging on December 5th and 6th when they meet in Vienna. I don't expect to see deeper cuts necessarily at that meeting, but I think they're going to extend the cuts further on into 2020. And I think really try to portray an image of solidarity in making sure that people stick to their cuts.
So what do you then foresee for U.S. shale production, say, versus OPEC and the Saudis? I mean, are you more on the IEA side, where you're bullish on U.S. shale production, or are you more on the conservative side?
I think I'm probably somewhere in between here, Alex. So I certainly do see a deceleration of U.S. oil production growth in 2020. In 2019, we're probably going to see just over 1.2 million barrels a day of growth. I think that number moves to somewhere between 800 and 900,000 barrels a day in 2020. So clearly, growth will slow over the next couple years. Now, part of that is the law of large numbers. As we get larger, it becomes harder to grow. But we're also seeing some of the better inventory in the shale play start to become more and more exhausted over time.
On the more bearish side, ironically, is a U.S. shale CEO. So I spoke to Scott Sheffield earlier in the week. He's the CEO of Pioneer Natural Resources. Here's what he had to say about his prediction.
They're way too optimistic on U.S. oil shale. So the numbers have been driven down significantly. They're saying it'll supply 85% of the growth in the world's growth in oil over the next, between now and 2030. That's the next 10 years. I think it'll be more like about 35%.
What if he's right, Leo?
Well, I think that clearly would have, broad-reaching implications for oil prices. To the extent we do see even a more broader slowdown in U.S. shale over the next several years, then clearly I think you'll see oil prices move in the upward direction. I continue to believe that as you look out into, say, 2023, 2024 and beyond, we will see more of a pronounced slowdown in U.S. shale. However, I think in the short term, you're still looking at pretty rapid growth, but certainly when you get into the out years, a lot of the key plays that have driven the revolution, like the Eagle Ford and the Bakken, will have virtually exhausted most of their inventory. So shale growth rates will clearly slow down.
Yeah, Leo, and there was another note that caught my eye this week. It actually came from Bernstein, and they were talking about peak oil growth, but they didn't really look at it in the U.S. at first. They actually said that deep water will actually peak in 2020, and then shale is going to peak a few years later, and then oil sands is in question because of sustainability and CO2 emissions, which leads to the whole we're going to have higher prices, which is something that the IEA highlighted in their report. What do you make of that kind of call?
Well, I think from a deep water oil perspective, you have a lot of growth over the next 6 to 12 months, driven by the startup of a very large field in Norway last month. You also have production starting to come on in December for the first time in Guyana, and Brazil will continue to grow throughout 2020 as they bring on some deep water fields. So I do think you'll see continued growth into 21, but I generally agree with the premise that there is a lack of large deep water oil fields that are going to be coming online as you work your way into 21 and 2022, really due to lack of investment after oil prices crashed in mid-2014. So I do think you are going to see a significant slowdown once you get past 2020.